Wednesday, November 1st. Market analysis, Stan Ehrlich. You know, we start out with the S&P or one of its favorites. And this is now the beginning of November. October is behind us. The October lows apparently have taken place on last Friday, October 27th. This is the this is the E-mini December futures contract daily data chart. And it's taken off very nicely in the last 3 days. Monday, Tuesday, and today, Wednesday. Now, we've had a fairly decent rally from the low of last Friday to today's highs. Every day, Monday and Tuesday, we're up after we got oversold on Thursday and Friday, for the most part, in the indexes at the end of last week. And that caused us to expect some sort of a rally very soon. And it was still in October. So here we are. Now, in the next couple of weeks or more, we should not make any lower lows than last Friday's low. We should have some sort of a minor downside correction, and I'm going to talk about that in just a moment. In fact, it may still happen yet today or in the next couple of days. And I got some specific numbers. But the downside correction should be pretty mild, and then we should see new highs again. All right. That secondary new high toward the end of the week, let's say, is going to start to carry us up into previous trading ranges, which was late September and October. So little bits and pieces of trouble on the way up, but the most important one is the high on October 12th. Closing above that high in the next few weeks should perpetuate a longer-term bull market, overall technical, longer-term type scenario, and basically prove, if you want to use that word, that this had been last Friday, the October low. Okay, next, we've got the spider, basically the same kind of commentary, but the spider did come down in the SPY to a support area, drop a little tiny bit below it, but it closed in it, not below it, and in oversold conditions. A favorite combination of mine. So here we go. Monday rally, Tuesday rally, and today so far rally up about 1.5 points, which is not much. And it's not even in the middle of today's range at the moment. We'll take a look at the short-term chart in just a second. We did gap up this morning. Two comments about this. We actually gapped up and away from the top of the trading range or support and resistance zone that I've drawn here, this blue zone. That's a good breakout, just in the right place, basically. But gaps are almost always closed, so I am expecting very soon, could be today, in the next day or two or three, the market to come back down to yesterday's high, which is just a little bit below. I mean, it's a very small amount, maybe 10 ticks, 15, something like that, below today's low to finish closing the gap. It opened and came down, but didn't do the job completely, and then went up and made its highs and has now slipped back down somewhat. So I am looking for this resistance area, which we poked into for the first time on the way up, to be broken and chewed into very quickly in the next few weeks. But like any bull market, you're going to have your zigzag on the way up. Next chart is the spider 1-minute chart. We had a low just a little bit ago at 9:43 California time, 20 minutes ago. So we need to start making higher highs than these last couple of little rallies, or we're going to keep slipping a little bit and get back down to this big purple line, which is where the gap is. At that point, I'm kind of expecting to turn back up or a little bit lower and then turn back up. Next chart is the QQQ. It also gapped up. So same statements here. Plus that gap is at the beginning of what was the resistance, and we just simply are trading today in the QQQ above all of the beginning of resistance, which was around the 351.25. So coming back down to that level, give or take a very small amount, and then turning back up again would not be a surprise. Next chart is the NASDAQ Christmas futures contract. We talked about this pennant or downward slanting wedge formation starting about a week ago. Well, actually earlier than that. But the downside breakout was bothersome, but it did get oversold. So I did expect to rally back up to resistance, which it did. But yesterday, it started to get above the resistance line and close a little bit stronger. And today, there's follow through. Now, if we stay in this wedge or pennant formation, we probably are going to go back up to the bear trend line at a minimum and then start to chew and break out above that, chew at the resistance levels on the way up to new highs for the bull market. I am still very bullish long term. Frankly, I can begin to say things like well into next year, maybe. Okay. I normally don't forecast something really long term like that. DIA oversold down into support, turned around after Friday's low, being oversold, and has rallied nicely into resistance. They're all similar, except for the couple of gaps. There's no gap here. Coming up into resistance. Now, this is what is typical for the beginning of the next significant leg up after we've had, a 1, 2, 3, 4, 5 coming down, a little LA account, and back to, in some cases, a 50% retracement. The story is totally different for the Russell 2000, but it is a bullish story. That's important. You have to realize that a couple of days ago, we had a bullish engulfing ER buy signal and right around the lowest price levels for the last 3 years. We broke the lows for the last 3 years. Now zooming in, by only a very small amount, the bullish engulfing was an indication the market's trying to bottom out, and it's not doing a very good job of it, and that signal didn't work really. But again, I've said before, they sometimes cluster 2 or 3 or 4 within a month. Usually it's 2 or 3, rarely 4. So I'm still looking for this to turn up convincingly, and that essentially is closing above the high of the end of last week. Yeah, above last Wednesday, Thursday's trading range high, I believe. 166, let's say. So all of the indexes have reasons to be bottoming out and starting a rally. Is the rally going to carry? Are we going to see new highs? And I do believe so. It may take into January or February, but I'm fully expecting new highs. All right, now let's take a quick look at the October low chart that I've had on the screen almost every day, I believe, for the last 2 to 3 months. This circle here was essentially a bullseye that I drew way back in September 21, and that was the price level of 107.5 to 106, 407.5, not that bearish, to 406, and in the month of October. So I had put a little dot exactly at the price and date. I didn't get it. You know what I did get? I got a low in oversold condition in the circle and not too far away from the price level I had pegged. That bottom was 109.21, and the high end of my little zone was 7.5, 407.5. So 40, yeah, did I say what? 407. Wait, hang on. Sorry about that. 409.21, period. Yeah. So we have come to today's high about 22 and a fraction, about 13 points in 3 days, essentially 3.5. Not bad, not great, but not bad. Now, I know there's some fundamental information coming out in about an hour, a little less than an hour, the Fed, I believe, and that could, not necessarily, make things good or bad. I'm going to mention something I learned a long time ago. Markets move on anticipation. So if they think a report is going to be bullish, they're going to start moving up in advance of that. It may be days, it may be even longer period of time, it may be a shorter. But generally speaking, markets move in anticipation, but tend to reverse on realization. So if it is slightly bullish information that we get soon, maybe we're still going to have a correction. Maybe it'll hang in there. I just don't want on this disappointing information, this thing to go all the way down and make lows lower than last week. that would not make me happy. That is not what I expect. And any minor dip at this particular point, especially the closed gaps, could and should be a buying opportunity. Let's look at the futures. All right. Another perspective, the E-mini futures contract, it's a continuation. You realize that we had a 50%, just a little bit more than that, downside retracement from the October 13th low last year, 2022, from the high that we had on July 27th. And by the way, on October 13th, we did get an ER buy signal on the bottom of the bear market to the exact day. And that is, of course, the beginning of this bull market. And we got a sell signal on the exact high day also. So I was kind of hoping for a big buy signal here recently, which is still possible, but the time is waning to have it develop. Okay, so I don't always get what I want, that's for sure. Next chart, NASDAQ back up into the wedge or pennant formation, like what I see. Let's see some follow through with the usual ping pong ball back and forth action, but on the way up. Next, bonds have made new highs for the last couple of weeks. This is now today a new high since October 18th. I like what I see. We have a green bullish engulfing on the low day. Exactly. 2 days after that, we got an ER3 fill. Price is about 108.23, give or take a tick or so. And it was a small loss on the first day, a profit, a little less, and then it came back up. And now we've got the best profit at the moment that we have since the signal, and a new high. I'd love to see this market close at least where it is, if not above the highs of the last 2 weeks. And then I think we're on our way up to a minimum 114.12. And then we should be looking at the resistance area, which is a significant amount more profound. And that would be at about 18.19, 119-ish. Next chart, 10-year notes. Yes, we have new highs for the last 2 weeks. Yes, we look like we're going to have a new high close, but again, I'd love to have it above the previous rally highs for the last 2 weeks. Then we're going to be looking at overcoming a significant previous rally high at 108.17-ish. And then next, all the way up into a major resistance area. And I think I should start dragging these resistance bars here to the right because they're going to be relevant in a couple of weeks, maybe. Yeah. Next is crude oil. I really am a little baffled momentarily. If we break below this support area that we're sitting in, that could probably drop it down to the next significant red support area that I drew in down here. So it depends upon whether we get a downside breakout or we start some kind of a rally. I'll just leave it like that for the moment. If I don't have something I really feel comfortable in saying, I should say nothing. Next, natural gas. Well, yesterday I was skeptical about that big pop-up. And today we have a doji and we're down a chunk, but it's not resolving anything. So kind of like crude, I'm going to not say much about natural gas at the moment. Big sideways, slightly uptrend. Nothing I'd be aggressive about. We did have a great sell signal, a great short sale, and a great trade on the short side, but we're out of that. And we're at the moment trading higher than our previous short offset. Next chart is heating oil. Here, support is holding pretty well. And we're starting to see new highs for a couple of days. And the intermediate trade since, springtime is up. You've got higher highs and higher lows, except for the last couple of months. Kind of in a little sideways, or you could call pennant formation if you like. So we want to break a little bear trend line across the last 2 months with the highs. That's one thing. And we don't want to break below the lows of Monday. So I'm friendly. I'm looking for higher levels. Not giving it a real high rating on the confidence level, though. Next, bearish engulfing yesterday on gold. I screamed bloody murder, point blank. The market comes up and opens approximately unchanged, rallies up a little bit above our new short sell prices, which were on the chart yesterday. We're short. turned around and we have a profit. I'm looking for the gold market to come down without any higher highs, of course. Very potentially to close this old gap down here. That would be 1850. Next chart. Silver did have a sell signal that did not work. It had a small loss. It kind of double topped out, if you want to call it that. What we have is support that's trying to hold, and it's kind of, banging into it to the second time here. The big thing here is, look at this. We got a big double top, by the way, self signals on both of them to the exact days. You can't get better than selling both highs in a double top. Or maybe you could by buying the bottom of the break on March 10th. Or maybe, selling it right there and selling it right there and buying it right there and buying it right there. Anyway, I think the support's going to give way, and I think we're going to see lower levels, partially because of that sell signal in gold is starting to work. And I did have a sell signal that didn't work quite right, but again, they're sometimes part of a clustering. And we had 2 up in that area. We actually had 3 here, but I would call those 2 here a cluster. And then we had 3 down here, but the last one was a good one. So looking for lower levels. The next chart is platinum. Overbought and slipping. So that's a reason to slip back down some. But we did try to close an old gap. It didn't really come very close at all. I'm expecting, because of silver and gold's expected bear move, for platinum to come down some as well. But it's a little bit more ambiguous. I'm not getting the best signals at the moment on platinum. We did get one at the bottom. We bought the bottom of the break, and that was October 6th. We sold the top of the rally on September 1st, and we bought almost the exact low on August 17th. Next chart. This is high-grade copper. Nothing lately. A lot of resistance overhead. Probably going to make new lows in the next week or 2. I would expect that. Right now, it's struggling to hang in there in a support area, which I think obviously is going to go by the wayside, and we're going to slip back down to 33.5. The highs are lower, the lows are lower on the average, and we have overall a bear trend for the year. Next chart. Soybeans. Pretty iffy at the moment, trying to decide what to do for a week plus. It's just been fiddling around in the same range. Like I said before, if I haven't got anything solid to say, except for the buy signal that we had on October 12th, that's, well, okay, it's working, but it's certainly not doing much. I have to be bullish. There was a buy signal and it hasn't been violated, and it just was waiting maybe to punch out of it to the upside. We're in a support area, and it is holding with that buy signal basically in the area. Next chart. Soybean oil. Oh my, we have a new low again. We are short, ladies and gentlemen, from August 21st with an ER sell signal on the second high of a double top. Too bad, like silver, we didn't get a sell signal in both cases in the double tops, both tops. But the ER1 got short the day of the bearish engulfing, of course. And here we've been tracking this for weeks now. You've seen it every day. We're not out. The stop continues to fall. We're looking for a downside objective of approximately 50, and it's already 50.84. I haven't got much more to go, and it could be today or tomorrow that it reaches that. Now, that does not mean it's the end of the bear move just because we reach a bearish objective. So don't, go saying, yay, it's over. It could very well drop into the mid 40s or even more. I don't have a good handle on that. Let's just rescale here for a second. And I will rescale. There we go. Okay, so yeah, I can't rule out mid-low 40s at all on a longer-term basis. It's just that 50 is a support area and a minimum downside objective from that head and shoulder top formation. Now, meal. Again, I'm not going to say much for the moment. We're in a resistance area that has stopped it several times before, and so far it has done it again. The rally high was almost exactly at the top of the resistance area, and that would be Friday's high. So overbought conditions slipped back down the last couple of days. Today is pretty much unchanged, down a few ticks, but a doji, and I'll pass on commentary on meal. But corn is doing what I thought. We're starting to make new lows now for weeks and coming very, very close to what wheat has done. And I think corn's going to do the same. As I've said, wheat market has made new lows on the original breakout, which was late August, and then rallied to resistance, made new lows, oversold, rallied a little bit, got oversold again, rallied a little bit, almost made new lows, and then had a little bit more of a rally. But look, we're all the way down very close to previous lows, and I expect new lows very soon. Cattle had yesterday a bullish engulfing ER buy signal official period. So ER1 is long from yesterday. ER3 has been filled this morning at about, what is that number? 183.29. And we are trading just a little bit above that at the moment. So we have a small profit on our brand new ER3 long and a tiny little profit on the ER1 long from yesterday as well. So I am obviously looking for the gap to finish getting closed. It came very close to doing it yesterday and today, but that's just the beginning. It's going to chew its way up to and through resistance and get up to 188.15 at a minimum soon, by the end of next week. And then we'll see if it can follow through and get up all the way back up to low 190s. Next chart, live hogs. Heck, we got a buy signal basically on the bottom. It was last week. It went up 1 day, 2 days, 3 days, 4 days, and today is the 5th day. We're down just slightly at the moment. So I'm looking for a minor downside correction, maybe 69.86 to the support, and then turning back up again and getting back up to this resistance area, which would be at least 72.60. Let's call it 73.50 area. Bullish, working just fine. Next, I talked to you about a whopper of a huge long-term major. I can't use more synonyms than I can. Bearish engulfing ER sell signals and orange juice finally yesterday. And those are the words I used, and I was adamant about it. Now, I don't know that we're going to ever get an ER3 short fill at 399 and change. But ER1, like always, is short from the signal day, which was yesterday, and that would be a short at about 391.90. We are down another chunk at the moment, heading south very quickly. You realize we're now at the lowest lows and the lowest closing prices for approximately 3 weeks in 1 day after making historic highs. So, it could easily drop off a lot more very, very quickly. Something profound happened yesterday, and we see it in the price action, and we got a signal, and whether we know what it was or not that happened, and you may never know fundamentally, we got a sell signal, and we're short. Let's see what happens. This could be a whopper. Next, cocoa has a similarity, by the way. August 7th in cocoa was a gigantic bearish engulfing. It went down very, very sharply the next day. And in fact, it got oversold from being overbought in 24 hours. That's very rare on daily data charts, no less. So it bounced and it kept coming and made new highs. Support held on a correction and it made new highs, overbought again. Now we've come down today to that minor support area, my first little downside objective, which is the old high. And from here, it could easily start to run back up again. It's a very small correction after being quite overbought. So I do expect a little bit more downside move. I suppose a good educated guess would be a 628, somewhere in this ballpark, right around in here. That looks like the next stopping point on a downside correction. I'm not turning bearish at all. This is a correction to buy on in a bull market. Next chart. Coffee. Bearish engulfing. I gave up the ghost yesterday on it continuing to work lower because I thought I was going to just rocket straight up, but resistance stopped it. And today it's given everything back that it rallied yesterday. And now all I can say is the ER sell signal is still the highest high for the rally. We had a very short-term, nice short position trade, but everything would have gotten stopped out yesterday. So we're flat momentarily, no new signals, and I'm kind of expecting a 147 and change downside objective. Next chart is sugar. Again, long-term bull trend, higher highs and higher lows. Looks like it might even be forming a large upward slanting wedge or pennant if I draw a line off of the high of April 27th and off the high on September 19th. I might do that later. Not important right now. So a little friendly, nothing particularly worthwhile. Next, cotton the rag. There we go. New low ground. Resistance stopped it, double top, drop it, oversold, bounced a little bit and crash. So here we are in new lows since early July. This is November 1st. But because of the size of the break in just the last 3 days, we are now just barely getting into oversold conditions. I don't expect today to be a low day, frankly. I think it's going to come down first to about 76.85, 76.85 on this cotton continuation contract, and then probably have a decent bounce. One more look at the E-mini, doing very nicely, but it's not super strong. Remember, in a little while, the Fed's going to open its mouth and we'll see what it has to say. You guys have a great trading day. Mañana.